Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Asset Management Report. Today is Thursday, March 20th, 2008. Meridian Art Partners launched its inaugural art investment fund, the Meridian Emerging Art Markets Fund. The fund focuses on contemporary art from emerging art markets including Africa, Asia, India, Latin America, the Middle East, and Russia. The fund will also include a small allocation of established Western contemporary art. The fund is a 5 to 7 year closed-end limited partnership open to accredited investors worldwide. It is available through two entities, one based in the U.S. and the other in the British Virgin Islands. MAP is on pace to raise $100 million by the end of the year, with an initial closing scheduled for the end of the second quarter. The minimum investment level is $250,000. Staying with asset management news, the UK's Treasury announced plans to offer favorable tax treatment for more offshore funds. This, according to Reuters, would give UK investors access to a greater range of investment funds. Offshore funds would no longer have to distribute at least 85% of their income to investors to qualify for capital gains tax treatment, but instead could report income. Julie Patterson, the director of authorized funds and tax at the Investment Management Association, says, quote, from an investor's point of view, it gives them a wider range of funds to invest in. And in other asset management news, Barclays Global Investors has launched the BGI Frontier Markets Fund, offering exposure to pre-emerging market economies. According to Money Management Letter, the fund will invest in 16 frontier market countries and will be benchmarked to the MSCI Frontier Markets Index. Amy Shiodagher, the managing director and head of U.S. equity indexing at BGI, says, quote, the BGI Frontier Markets Fund will serve as a complement to institutional investors' allocations to traditional emerging markets. And in asset management news in Asia, Ping An Insurance is acquiring half of Fortis' asset management unit for 2.15 billion euros or $3.4 billion. Ping An is China's second largest insurer. According to Bloomberg, the purchase of a Ping An will include the asset management business of ABN AMRO Holding that Fortis acquired last year. The Chinese insurer bought 14.2% of Fortis for 1.81 billion euros in November. The money from Ping An will help Fortis CEO Jean-Paul Vautrin restore his company's finances after 1.8 billion euros of asset write-downs. Ping An won shareholder approval this month to raise about $14 billion selling stocks and bonds. The insurer plans to use proceeds to expand outside China. And that rounds out today's Asset Management Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Asset Management channel online and read the latest developments.